So good day. So we're down now to the part 3 of our IFRS number 2 share-based payment discussion. Okay, so for this PowerPoint presentation, we are about to combine the discussion what if present, yung cash settled and equity settled, okay, in one particular alternative. So this is share-based payment transactions which with cash alternative. So one of the question here in this presentation is that is there really a share-based payment transaction with cash alternative? So let's try to read from IFRS number 2, paragraph 34. So for shared-based payments transactions in which the terms of the agreement provide either the entity or the counterparty with the choice of whether the entity settles the transaction in cash or by issuing equity instrument, the entity shall account for the transaction or the component of the transaction as a cash-settled share-based payment transaction if and to the extent that the entity has incurred a liability to settle in cash or other asset, or as an equity-settled share-based payment transaction if and to the extent that no liability has been incurred. So technically, yes, there is, based on IFRS number 2, paragraph 34, about shared-based payment transaction with cash alternative. So meaning in one share-based payment agreement, no, there would be a choice between cash settled or equity settled. So later on, we will try to find out how are we going to account it for. Okay? So this particular transaction guarantees share options are given to a choice to receive additional benefits either in form of cash or equity instruments. So what will happen if we have a share-based payment transaction with cash alternative? So it is presumed that a compound financial instrument, okay, any compound financial instrument, it means it has a characteristic of being a liability and equity at the same time, just like what we have previously discussed in our bonds before, no, yung bonds with um, equity component, okay, such as yung bond with warrants, di ba? Okay, and convertible bonds. So they are considered as compound financial instruments. So parang ganun din itong particular share-based payment transaction with cash alternative, no? Thus, the total value of this compound financial instrument is bifurcated into debt component and equity component. So as mentioned a while ago, we need to segregate the compound financial instrument as to the equity or its debt component. Now, using the residual approach, now the fair value of the debt component is deducted from the total fair value of the compound financial instruments. The excess is assigned as the value of the equity component. So, just like the previous computations na meron tayo on this particular scenario, okay, so the fair value of compound financial instrument, no, less the fair value of the debt component at the date of grant. So that will be the value assigned to the equity component at the date of grant. Okay? So at the date of grant, magko-compute na tayo ng ganyan. Pero we will not have yet any entries, no? Kasi this computation will just be a basis for a future journal entry. Okay? So the value of the equity component, so yung nasa dulo ng computation at the date of grant is not subsequently adjusted during the vesting period. Meaning, kung ano yung na-compute natin dyan na value assigned to equity component, yan na po yan. No? Wala na magbabago. Meanwhile, the debt is measured at the fair value and is adjusted at the end of the reporting period. So, the debt component, gaya ng ating cash settled based transaction, okay, based on the fair value, it will change every time. 'Di ba? Depending upon the valuation at the end of the reporting period. But for the equity component, dahil we are basing the equity component such as share options before on the fair value of the date of grant, then most likely hindi po siya magbabago as time goes by. Okay, so later on, we will use this computation as well as your knowledge about share options as well as share appreciation rights combined for us to give the entries related to share-based payment transactions with cash alternative. Any question? Let's have an example about this compound financial instrument, no, which has a cash alternative. Now, this problem is actually derived from problem number 24 of stockholders' equity. So you can read the details from there. So on January 1, 2019, Ruby Red Company granted to each of its four executives the right to choose. So take note, right to choose. Ibig sabihin, hindi pwedeng dalawa. Either 1,000 ordinary share or to receive a cash payment equal to 900 share. So the grant is conditional upon the completion of a 3 year of service. So itong 3 years ulit, this is the vesting period, no? Okay, this is somehow a sort of service condition. The entity estimates that the value of the share alternative on January 1, 2019 is 150 pesos per share. The company's ordinary share had a fair value of 100 peso per share. So below are the fair values of Ruby Red ordinary shares. So we have um, 158 for January 1, 2019, 160 for December 31, 2019, 165 for December 31, 2020, 168 pesos for December 31, 2021, and 170 pesos for December 31, 2022. So one executive exercised his right to receive cash alternative on December 31, 2021, and the other chose to receive the ordinary shares on December 31, 2022. So as mentioned to you a while ago, the first step, okay, will be to bifurcate it. Okay, so let's see for the next slide on the actions as well as entries that we need to record. So on January 1, 2019, the date of grant, you need to have only a memorandum entry. So we have the memorandum entry here, which is granted to each of the four executives the right to choose either 1,000 ordinary share or to receive cash payment equal to 900 shares. The grant is conditional upon the completion of 3 year service, okay, in the company. So that's the memorandum entry at the date of grant. So since nabanggit ka kanina on the theoretical discussion that we will be using the residual approach, and at the date of grant we need to compute for the separation of the equity component and that component for the share alternative or the compound financial instruments. So technically, yung computation, pwedeng hindi niyo siya ilagay on your journal. It's just a separate computation that you can have. Okay, so now, on the computation, you have the fair value of the equity alternative. So ito yung share alternative natin na kung saan sinasabi doon that your 1,000 share, okay, share ordinary to be given to the four executives. So 4,000 share yon times the 150. Ano yung 150? That's the value of the share alternative on January 1, 2019. So yun yung gagamitin natin to compute for the compound amount of the instrument, which is 600,000. Now, we deduct the fair value of the debt component. So ang debt component natin dyan is yung babayaran natin ng cash, which is yung 900 share, di ba? Cash payment is equal to 900 shares per executive. So 900 times 4 times magkano yung fair value ng ating share at the time. So that's 158. Okay, kaya naging 568,800. So we deduct that from the 600,000. So ang fair value or the value assigned to the equity component is 31,200. So yung 31,200 na yan is eventually, yan yung magiging share options outstanding natin kasi yan yung equity alternative. So that's the equity settled base payment amount. Now, itong debt component natin, hindi yan yung i-record natin. Bakit? Kasi nabanggit din kanina in the theoretical discussion that it may change depending upon the fair value of our share at the end of the reporting period. Okay, clear? Now, so the first journal entry would be recorded on December 31, 2019. Okay, so mag-compute muna tayo, no? So for the share options outstanding, yung value doon sa equity component kanina na 31,200, we need to spread that out over the 3 year period. Okay, so what will happen is times 1 over 3 kasi first year pa lang to ng what? Ng um, ating vesting period. Kaya 10,400 yung ma-allocate for that year na share options outstanding. Now, the share appreciation rights payable, okay, should be based on the usual computation natin, which is yung 900 share times 4, so 3,600 yung share appreciation rates niya, times, okay, wala tayong excess na nabanggit kanina. Ang sabi is, di ba, we will receive, or the executive will receive a cash payment equal to the 900 shares. So, walang excess. So, kung ano yung value ng 900 share, yun yung marireceive mo for executives. So, dito, ang multiplied natin is 160. Ano yung 160? That's the ending fair value on December 31, 2019. Okay? So, yun yung supposed to be marireceive na employee if at that time yung computation. No? So, that's equal to 576,000. And times 1/3, kasi first year of the 3-year vesting period. So for 2019, the share appreciation rates payable is 192,000. Okay? So for our entry, we debit compensation expense 202,400, credit share options outstanding 10,400, and credit share appreciation rights payable 192,000. So at the end of 2019, no, the values that we have, okay, share options outstanding. So remember, saan mapupunta yon? Shareholders equity. So 10,400. Then the share appreciation rights payable, a liability, would be 192,000. So ganyan yung gagawin natin paulit-ulit in the next years of the vesting period, since hindi pa naman po nakakapili yung ating employee kung ano ba talagang kukunin nila. So the choice will happen at the time na pwede nang i-exercise yung ating share options or even the share appreciation rights. So any question? So to continue, for December 31, 2020, for our share options outstanding, still in 31,200 na fair value or the value assigned to the equity component, okay, divided by 3, which is 10,400. Sir, bakit ganun? Di ba cumulative tayo minus? Okay, same lang kasi siya. So parang gagawin mo 31,200 times 2/3. Tapos i-deduct mo yung 10,400 last time. That's still 10,400 actually. So kaya 10,400 for 2020 for the share options outstanding. Then for the share appreciation rights payable, it will be computed at the 3,600 share appreciation rights multiplied by the fair value on December 31, 2020 na 165. So that's 594,000 times second year na to, di ba? So 2/3 second year of the vesting period. So that's equal to 396,000. So that's the cumulative value of the share appreciation rights payable. Then deduct the previously recorded SAR payable in 2019 na 192,000. So our share appreciation rights payable for the year 2020, okay, will be adjusted at 204,000. So add the two, then that would be the total compensation expense. So our entry would be debit compensation expense 214,400. Then credit the share options outstanding 10,400. Credit share appreciation rights payable 204,000. Okay, so for our ending balances on December 31, 2020, so for the share options outstanding, since dalawang 10,400 na yon, so that's a total of 20,800 going to our SHE, no? And then for our share appreciation rights payable, so we have last time 192, tapos 204 ngayon, 1,000. So a total of 396,000 going to our liabilities. Any question for 2020? Wala? Okay, so in December 31, 2021, which is the last year of the vesting period, so for the share options outstanding, still the same, 10,400. For the share appreciation rights payable, so yung 3,600 multiplied by the fair value at the end of 2021, which is 168 pesos, Okay, that's a total amount of 604,800, then times 3 over 3 kasi third year na to ng vesting period natin. So 604,800 less yung cumulative balance ng share appreciation rights payable in 2020 na 396,000. So for our adjustments in 2021, it will be 208,800 na lang. Okay, so for our compensation expense, we debit compensation expense 219,200. Okay, that's the total ng ating credit na share options outstanding na 10,400. Then share appreciation rights payable na 208,800. So at the end of the vesting period, no, our ending balances for the share options outstanding is yung computed kanina na amount ng ating fair value of the equity component, which is 31,200, and we have as well the share appreciation rights payable na totality ng lahat ng payable na na-entry natin, which is 604,800. So any questions? So after this year 2021, okay, meron na tayo exercise. So kung mamaya in the next slide, we will discuss about the exercise of this either share options or even the share appreciation rights. So in the exercise kanina, the detail was one executive exercise his right to receive the cash alternative on December 31, 2021. So yung cash settled in exercise ng isang executive ng December 31, 2020, and the others chose to receive the ordinary shares on December 31, 2022. So let's find out what will be the entries. Unahin natin yung December 31, 2020, which one executive exercise the cash alternative. So mangyayari, babayaran po yung ating executive related doon sa value ng ating cash alternative. So what will happen, dahil may options siya to choose whether equity or cash, at dahil pinili niya yung cash, so what will happen is parang magiging unexercised yung portion ng um, ating share options or yung equity settled natin. So yung share options outstanding niya na related. So yung out of the 31,200, pang-apat na executive yun, di ba? So kukunin natin yung 1/4 which is related doon sa one executive na nag-give up. So that's 7,800. Ilalagay natin sa debit yon. Sir, why? Because again, we need to eliminate that since hindi na-exercise yung equity alternative. Now, yung part naman ng share appreciation rights, no? 'Di ba may 604,800 tayo na ending balance noong 2020 December 2021 December 31, 'di ba, dun sa nakaraang slide. So ang gagawin natin, we just simply divide it by 4 para ma-compute magkano yung babayaran para dito sa isang executive na to. So that's 151,200. So what will happen on our credit, we will have a cash to be paid na 151,200. So yun yung equivalent ng share appreciation rights payable natin. Then dahil again ginib up nga yung equity alternative, so what will happen is ilalagay natin sa paid-in capital from unexercised share options, yung 7,800. Kaya ito yung naging entry na debit share options outstanding, 7,800. Debit share appreciation rights payable, 151,200. Credit cash, 151,200. And credit paid-in capital from unexercised share options, 7,800. So parang ang nangyari, pinag-combine lang natin yung dalawang konsepto ng isang equity settled na kapag nag-expire or kapag hindi na-exercise, at the same time, ano yung entry kapag nag-exercise ng cash alternative. Okay? So, yan yung entry natin. So, ngayon, after this exercise, ang natitira na lang sa lahat sa share options outstanding at saka sa share appreciation rights payable is eventually, 3/4 na lang, di ba? Okay? Is that clear? Okay. So, in December 31, 2022, ang sinabi kanina is yung tatlong executive, in-exercise nila yung share alternative. Ano ba yung share alternative natin? They will receive 1,000 ordinary share. Okay, so pero bago tayo mag-proceed doon, okay, so mapapansin niyo sa given data, nagbago pa rin yung fair value ng ating what? Share. So what will happen is yung share appreciation rights payable, we need to update that. So what will happen on the first set of entries dito sa slide na to, in-update ko muna yung fair value ng ating share appreciation rights payable. Sir, bakit kailangan pa i-update? Eh, di ba, hindi nga i-exercise yun. Yes, we need to still update that because of the concept of the compensation expense at saka ng SAR payable natin dun sa discussion ng cash settled shared-based payment transaction that we need to update the value at the date of exercise, hindi ba? Okay, so now, in the compensation expense, we debit 10,800 and we credit share appreciation rights payable. So, saan na-compute yun? So, yung 900 na supposed to be marireceive kung cash alternative ka, multiplied by the 3 executives na lang na natitira times yung change ng value. O di ba ang huling fair value natin ng 2021 is 168 and naging 172, so yung increase na is 4 pesos. So yun kaya naging 10,800. Okay? Question. So nung in-update natin, no, ang mangyayari ngayon sa exercise is that, okay, parang combination siya ngayon ng exercise ng share option at saka yung hindi na exercise na cash settled or SAR natin. Okay, hindi na exercise yung SAR. So what will happen is una, in our debit, of course, yung natitirang share options outstanding na 23,400. So that's a 3/4 of 31,200. Okay, then debit share appreciation rates payable for 164,400. So, saan na-compute yun? Eh, di ba yung share appreciation rates payable kanina, we have a total of 604,800. Doon sa December 31, 2021, dinebit mo na yung 151,200. Tapos, dito sa first entry ng 2022, nag-credit ka ng 10,800. So, pag inad mo lahat yon at dinidak mo yung nakadebit, then that would be 464,400. Okay, is that clear? Okay, so we credit now the ordinary share capital. Of course, that would be at par. So yung 1,000 share na para doon sa 3 executive times the 100 par value. So that's 300,000. And the excess, which is the ordinary share premium, is 187,800. So that is what will happen, no? Usually, ano bang tinatanong, sir? So, pwedeng tanongin sa'yo, limbawa sa 2021, okay, magkano yung cash na babayaran? So, based on the fact, ang babayaran is 151,200. Okay, in the exercise of the share alternative, ano yung mga possible na itanong dyan? Eh, magkano yung share premium doon sa exercise? So, ang pwede mo isagot yung 187,800. So, in the future, once you're asked of some of this question, maybe I asked you to put an entries on it kung hindi pa kayo sanay on the usual computation. Okay, pero, ayan, entries para maging safe tayo in terms of the sequence of the entries. So that's our first example about the share-based payment transaction with cash alternative. So any question? Another example for this share-based payment transaction with cash alternative. So on January 1, 2018, Kim So-yun Incorporated grants to an employee, so one lang siya, no, the right to choose either 1,000 phantom shares, so ano 1,000 phantom share na to, the right to a cash payment equal to the fair value of 1,000 shares or 1,200 shares with par value of 10 peso per share. The grant is conditional upon the completion of 3 years service. So that's our vesting period, 3 years. If the employee chooses the share alternative, the shares must be held for 3 years after the vesting date. So at the date of grant, the entity's share price is 50 pesos. So gagamitin natin yan later. No? At the end of the year 2018, 2019, and 2020, the share prices are 52, 55, and 60 respectively. The entity does not expect to pay dividends in the next 3 years. After taking into account the effects of the post-vesting transfer restrictions, the entity estimates that the grant date fair value of the share alternative is 48. So yung 48, yan yung gagamitin natin mamaya na isi-segregate as to the equity and debt component. Okay? So, these are the details na kailangan natin ha. So, kapag cash payment ang pinili 1,000 shares. Pag share alternative 1,200 share with a par value of 10 peso per share. So for the date of grant, no, again in January 1, 2018, so we will have a memorandum entry. So let me just read the memo entry for this Kim Soyun Incorporated. So grants to an employee the right to choose either 1,000 phantom share or 1,200 share with a par value of 10 peso per share. The grant is conditional upon the completion of 3 year service. Okay? So just like what we have in example number 1, so at the date of grant, pwede na tayo mag-segregate ng values natin. So the fair value of the equity alternative, which is yung 1,200 share times the fair value of the share alternative, which is 48, so that's 57,600. Then we have the fair value of the debt component na 1,000 shares times yung value kanina on January 1, 2018 na 50 pesos, so that's 50,000. So now the fair value or the value assigned to the equity component is 7,600. So gaya ng ginawa natin kanina, the 7,600 equity component will not change, but it will be amortized and spread out over the vesting period. Samantalang yung debt component natin, it will vary depending upon the fair value of the shares at the end of the reporting period. Okay, so on December 31, 2018, which is the first year or the end of the first year of this vesting period. So for the share options outstanding, the equity alternative portion or equity component portion natin, so the 7,600 times 1 over 3, since this is the first year of the 3 year vesting period, so that's 2,533. Then for the share appreciation rights payable, so yung 1,000 phantom shares natin times 52 pesos kasi yun po yung fair value ng ating share on December 31, 2018. So that's a total of 52,000 times 1 over 3 kasi first year of the 3 year vesting period. So that's 17,800. So the total compensation expense to be debited is 19,866. So our entry would be debit compensation expense, 19,866, credit share options outstanding, 2,533, and credit share appreciation rights payable, 17,333. Okay, so that's our entry for 2018, the first year of the vesting period. Now let's talk about the ending balances to be presented in your balance sheet as of December 31, 2018. So for the share option outstanding, that would be 2,533. Okay, and then for our share appreciation rights payable, that's 17,333. So any question? To continue, on December 31, 2019, the second year of the vesting period, for the share options outstanding, it will still be the same. So the 7,600 times 1/3 or pwede nyo rin gawin na 7,600 times 2 over 3. Tapos i-minus mo yung recorded ng 2018 na 2,533. It's still 2,533. Okay? Then the share appreciation rights payable, so yung 1,000 na share appreciation rights multiplied by 55 pesos, that's the fair value on December 31, 2019. Okay, so that's equal to 55,000. And since this is the second year of the 3 year vesting period, so 2 over 3, so we have a cumulative balance of 36,667. Okay, which the previous balance of the share appreciation rights payable should be deducted. Kaya ang adjusting natin for the share appreciation rights payable in 2019 is 19,334 with a total compensation expense of 21,867. So our entry would be debit compensation expense, okay, 21,867. Credit share options outstanding, 2,533. Then credit share appreciation rights payable, 19,334. So as to the ending balances to be presented in your balance sheet, so the share options outstanding for 2019 is 5,066. So yan yung 2,533 from 2018 and 2019. Then for the share appreciation rights payable, so that would be a total of 36,667. So yung 17,333 ng 2018 plus 19,334 ng 2019. Any question for 2019? Okay, so for the last year of the vesting period, so still, the share options outstanding did not change, pero nagkaroon lang tayo ng some peso adjustment since meron tayong rounding off kanina. So kaya naging 2,534 na lang siya. Okay, and then for our share appreciation rights payable, that would be 1,000 times the fair value na 60 pesos, no? At the end of 2020, so that's 60,000 times 3/3 since it is the third year of the vesting period, minus yung previous na balance ng share appreciation rights payable na 36,667. So for adjustments in 2020, it will be 23,333 na lang. With the total compensation expense natin na 25,867. So our entry for 2020 would be debit compensation expense 25,867, credit share options outstanding 2,534, and credit share appreciation rights payable 23,333. So yan po yung entry natin. And lastly, for the ending balances as of December 31, 2020, so with the share options outstanding na totality 7,600. So if you add all the share options outstanding from 2018 up to 2020, so 7,600, and that's actually equal doon sa fair value or the value assigned to the equity component. Then for the share appreciation rights payable, so pag inad mo lahat yon in 2019, may 36,667 tayo plus 23,333 in 2020. So that's a total payable of 60,000. So any question? Okay, so that's the end of the vesting period. Now let's take a look into the exercise. So lastly, for this example, no, I have provided two scenarios. What will be the entries related to this choice of the scenario? Okay, number one scenario is that if the employee has chosen the cash alternative, so pinili niya na makareceive ng cash, okay, so the entry in 2020 at the date of exercise would be debit share options outstanding. So yung balance sa 7,600. So we debit share appreciation rates payable yung 60,000. So ang babayaran natin is yung 60,000. So credit cash 60,000. And since hindi nagamit yung equity component, so our credit to the paid-in capital from an exercise share option is 7,600. So again, this will be the entry if the employee have chosen the cash alternative. So on the contrary, in the second scenario, what if the employee has chosen the share alternative? So ginamit niya yung alternative para bumili ng share. So what will happen? So we debit share options outstanding, or actually not bumili ng share but rather to receive a share, no? Or receive number of shares na 1,200. So entry will be debit share options outstanding 7,600. Then we debit as well yung share appreciation rights payable na 60,000. Okay? Then we credit the ordinary share capital na equivalent ng 1,200 times 10 peso, which is 12,000. And we credit ordinary share premium na 55,600. So if I will ask you here, what's the possibility ng mga questions? So sa scenario 1, pwede ko itanong sa inyo, magkano yung binayad? So the quick answer would be 60,000. Magkano yung un-exercise? Of course, 7,600. Sa scenario 2, mga pwede kong itanong dyan, magkano yung ordinary share capital na marirecord? Ayan, 12,000. Then, magkano yung ma-record na share premium related doon sa na-exercise na share alternative? So that would be 55,600. So those were the examples related to our shared-based payment transaction with cash alternative. So I hope na naintindihan ninyo that in the first place, kapag merong cash alternative on the share-based payment transactions, no, you need to segregate the equity and the debt component using the residual approach. Okay, and then you amortize them related to just like what we have done kanina. And then at the end, okay, the employee needs to choose whether magpo-proceed ba siya sa cash alternative or sa equity alternative. And we have already discussed ano yung mga mangyayari doon sa mga entries kapag nag-exercise ng share options lang or the share alternative o kaya naman nag-exercise lang ng cash alternative. So that's the end of the IFRS 2's discussion. So on our first part, na-discuss natin yung about sa introduction ng IFRS 2 at saka ng equity settled share-based transactions. Sa part 2 naman, we have discussed the cash-based share-based payment transactions. Tapos dito sa part 3, we have discussed the combination, okay, wherein we have the share-based payment transaction with cash alternative. If you do have question, please feel free to ask. And also, may I suggest that if you have a copy of the IFRS 2's full standard, so you can please read it o kaya naman download nyo sa www.ifrs.org ifrs.org, no? Yung IFRS to full version, or just simply watch yung YouTube presentation about the summary of IFRS number 2. Okay, so with that, thank you very much and have a good day.